Hello and welcome to this video. Today I'm going to be doing a stock analysis on Alphabet. Now, of course, if you don't know it, Alphabet is the company that owns Google and YouTube and other platforms related to that. They also own Uber and Waymo. Now, of course, remember this isn't financial advice. This is purely entertainment and educational purposes only. Now, I really don't like Alphabet anymore. I used to like it back in the day, but I don't anymore. And the reason for that is ChatGPT and other sorts. I like it. Of course, back in the day, you used to Google stuff, and now you can just type into ChatGPT or any other chatbot and get much better and more precise answers most of the time, of course. So, in the future, main part of Alphabet's revenue stream, which is Google, is going to be disappearing. 90% of their entire income is from ads on Google search engines. So, I think it's going to be a long road down unless Alphabet does something crazy and get their own chatbot. And I'm not sure if you know this, but Gemini has been ranked one of the worst chatbots, which is Google's own. Now, if we take a look at the stock over the past few years, as you can see here, back in May of 23, it was trading at 105, and then it was trading all the way up in 210 before the crash. It happened about 5th of February, and it has been downhill ever since. And of course, also on the Liberation Day here on the 2nd of April 2025, it of course fell even more. It's actually impressive. It only fell 3% on Friday the 4th. A lot of companies fell much more, such as Tesla and Apple and Netflix. As you can see over here, they fell 10, 6, and 7% each. So yeah, overall, it has been performing quite nicely, but in the future, I really don't think it is. But I am, of course, also biased because I just don't. I have a genuine disliking of the stock. I did like it, but of course, their market is just changing too much because of chatbots. Now they are starting to pay out dividends, as you can see down here. They pay out 20 cents in June, and in September and December, and in February. No, March, I mean. So they are paying out dividends 4 times a year, which of course is better than not paying out dividends only once a year, because this way you can reinvest your money more often. Now, as you can see down here, the earnings, they keep increasing their earnings and they beat them, which is quite great to see at the moment, but I strongly fear that this is gonna be removed in the future. Now, as you can see, the dividend payout is not great. It's 0.5%, which is quite poor. I rarely see them this low. But of course, it is a tech company, and it's quite rare for tech companies to pay out dividends at all. Now, you can see that revenue is still increasing, but the second that a chatbot gets more and more popular, their revenue is starting to fall. I personally am using ChatGPT more these days than Google, and I know a lot of people I know is also just using it, and I think it's gonna get more widespread as older people die and younger people start to use the internet more. Of course, I think people who are kids now, once they are 2025, they will only use ChatGPT and not Google. So maybe it's gonna take a few years before the revenue actually starts to take a hit, but I'm quite certain it will. Now, if we take a look at the seasonals of the, as you can see, it's actually quite new stock compared to how old Google is. It only hit the stock exchange in 2014. Now, as you can see here, we have some years where it's quite poor, as in 22 it was down 38%, this year down 22%, but of course most stocks are down for the year at the moment. And then 18 and 2014 it was also down a couple percentage. But besides from that, it has actually performed quite nicely, so more often than not, it does great. It's not insanely high returns, but of course if you get 20%, 28% all year over year over year, that accumulating effect is going to be quite nice, of course. Now, the technicals for the stock is for the day is a strong sell, and for the month it is still a sell. That's given because we did have this small rebound, but then of course it all crashed back down again. It's quite unfortunate, of course. So it's real not. If you like to trade with momentum, I would not trade at this at all before we see a golden cross like this, where we can see last times we have had a golden cross. It has been performing quite greatly after, and of course we did see a death cross here on the 10th of February, and it has been downhill ever since. It is down what, $40 from that is. It's down $40 ever since. Now the analyst rating on this, I'm actually quite impressed. As you can see, we have 46 strong buy, 10 buy, and 13 hold. But I think it's just because people don't want to miss out on Google because it is just so normal that Google is going to be a great stock, or Alphabet. But I think the parameters in which the company operates, the way they make their money, I think it's going to go poorly in the future. As you can see, annually they are still increasing the revenue, but beyond 2030, I don't think it's gonna increase anymore at all. I think it's gonna go downhill from there. So if you are in the stock, I'd probably get out by then at the latest, because a lot of times when a company is is forecasted that they're going to make less money in the future, people already start to sell out because they anticipate the worst. So I think this is a bit too high. At the end of the year, I think maybe it's going to be in 155. Of course, we see a lot of analysts rating making it positive, which means there is an incentive that people are going to buy up as analysts think it's going to be a great company. So, and of course, also they are estimating to increase revenue. So of course, at the moment, it isn't a bad idea to buy this, but I personally would just prefer to have my money in something that I can look out into the future, and I don't see that Google does that greatly in 5 years. So that is my analysis on Alphabet. Now, of course, if you did like this video, please don't forget to like and subscribe.